London-listed Kenmare Resources mines mineral sands on the coast of Mozambique. Its primary function is to supply plants that make titanium dioxide pigments and secondary supply for titanium metal production. It's just come from its Capital Markets Day, where it's been laying out its development plans. It has to increase production, expand margins and begin capital returns to shareholders. Michael Carvill is Managing Director and he joins us now. Michael, good to talk to you. It's a great day to talk to you as well because you've laid out all these new plans to your investors today. I want to step back a little bit if I can and ask a little bit more about the business model and what you're proposing to give to those looking at this as a new opportunity to invest in Kenmare.
Sure, and thank you, Jeremy. Yeah, look, we're a mining company. What we do is we mine titanium minerals in northern Mozambique. So it's a peculiar mine in that we're lucky in that we can dredge mine, which is the lowest cost form of mining and really is a first prize in this industry if you have the circumstances and the parameters available to allow you dredge mine. So we can dredge mine. We do it using hydro-generated electric power, so our power costs are low and our carbon footprint is also low because it's a renewable source. And finally, we export the products directly from the mine into seaborne transport. So we have our own harbour and transshipment loading facilities. So we're dealing with a bulk commodities such as similar to iron ore or coal or alumina or whatever. So consequently, it's really important that you can mine efficiently and that you can get this into your customer vessels without too much cost in terms of trucking or train transport or anything like that. So we're uniquely situated as far as that's concerned.
When you say dredging, are you underwater? Are you up against the water or what?
So this is not in a natural lake or it's not in the sea. It's on a effectively coastal plain. And so what we do is we dig a hole, fill it full of water and float within that pond that we have created, a processing plant and a dredge. The dredge mines from the front of the pond, pumps a sand and water slurry, which includes our titanium minerals, back into our floating concentrator plant, which separates using spirals, so not using chemicals or cyanide or anything like that, just simply spirals, puts the material down through many spiral starts. And as it goes down through the spiral, centripetal force pulls the lighter silicates to the outside while close to the axis the titanium minerals stay. We then eject the sand out the back of the mineral concentrator plant and take the heavy minerals, the titanium minerals, which only represent about 5% of what we've mined, off to our separation plant where we change it into final products and export it. But since we're mining from the front of this pond and building up the pond at the back, gradually the whole pond moves slowly through the ore body. And since the concentrator plant, the factory, is floating in the pond, it moves too. So effectively the pond is a transport mechanism of the factory and we're taking the processing plant to the ore as opposed to in normal mining. You mine the ore, you put it in a truck and you take it to your processing plant. And consequently it's a much cheaper form of mining.
Simple, straightforward, cheap, which is great. All investors like cheap, except when it comes to share price, of course. We'll get on to in just a minute.
Cheap when buying.
That's right, yeah. And it's environmentally friendly. You are aiming to raise production. Simple process?
Yeah, relatively simple process. We have operated for the last couple of years at about 1 million tonnes of ilmenite supply to the market every year. And that puts us as the 4th largest producer of titanium feedstocks in the world, but actually the largest producer in the world of traded ilmenite. So in terms of merchant ilmenite onto the market, we're the largest. But our operation is essentially fixed price. Not totally, but predominantly fixed cost. And so consequently, if we can increase from 1 million to 1.2 million tonnes of ilmenite supply, then our operating cost per tonne reduces and our margins increase.
What sort of percentage margin are you looking to increase it by?
So increasing our production by about 20% has about a 40% increase in margin.
That's substantial.
Yeah, it's very substantial. So how do we do that? Well, we increase our mining capacity, and so we have already completed part of that process in that we have upgraded one of our wet concentrator plant B by 20%. And our board has recently approved the development of a third small wet concentrator plant C. That project is underway. We've already placed the orders, and we expect delivery and commissioning of the project by the end of next year.
And of course, if you expand your production, you're going to get through what you own quicker. How long is the mine life?
And that's the other unique aspect of this project, is that our ore body, based on present expectations of mining rates, will last for about 135 years.
Okay, so it'll see most of us out.
It will see most of us out. No, it's not all in one zone, so we have to move from zone to zone periodically, but yes.
Much cost in doing that?
In moving from zone to zone? Yeah, look, I mean, none of this is cheap. There's the overall investment in the mine at the moment is running about $1.25 billion. And the expected cost of building wet concentrator plant C, which is the project underway at the moment, is $45 million. And so in 2020, wet concentrator plant B moves to a new zone, which is a higher grade zone. And from that point onwards, we'll be mining significantly higher grade than we've been mining over the last several years. But that move, you know, we're still in definitive feasibility study process. But a guideline price, including contingency, is somewhere about $100 million.
Yeah, so presumably you're having to start to think about how you're going to pay that now.
Well, our EBITDA for the first half of 2018 was $47.5 million. And if you annualize that, which is not an unreasonable expectation, we believe, we are throwing off, a significant amount of cash already. In addition to that, we have low net debt of about $9 million, and we have $84 million in the bank. So we believe that we have enough resources to complete this process of increase in production without having to resort to market.
Okay, that sounds good as well. And of course, today we've got to get onto this fact that you are now beginning to return money to shareholders as well. You're a dividend payer. How good is that?
Well, not quite yet. We're a dividend policy.
Right. Okay. Fine.
So our board
strategy is to pay a dividend.
Yeah, our board has agreed on a dividend policy. It was submitted to the board for the September board meeting. They've agreed, and we have now published that policy this morning. So we intend to pay 20% of profits after tax from starting in 2019. So we expect to be paying some dividends in 2019. And since 2019 and 20 are the years where we have some capital expenditure, which we've just been talking about, the dividend will be quite modest in those years. However, in 2021, it's our first year at 1.2 million tonnes of ilmenite plus co-products, we expect to have a much more significant cash throw-off, and so I think we will augment the dividend policy with perhaps a special dividend or a share buyback or whatever at that stage.
What do the authorities in Mozambique think of you? A London-listed company, of course, foreign ownership. You're obviously presumably paying taxes at whatever the local rate is.
Yeah.
What's the relationship like with the mining authorities in Mozambique?
Well, we've been there for a very long time, and we believe we've delivered for the government. We've built the mine. We operated under strict environmental guidelines, same way as if that mine was being run in Denmark or somewhere like that. We operate under the strictest financial guidelines, and we're compliant with them. The mine is powered mainly by hydro-generated electric power, so it's a renewable power source. Our carbon footprint is low. We work very, very hard to ensure that the local people see the presence of the mine in their vicinity as a positive in their specific lives, as opposed to just a national good. And I believe they do. And the government has worked cooperatively with us through the years as we've built the mine, and we've now been running it for 10 years in commercial production. So it's a positive relationship based on both complying with the terms of the agreement that we signed, both ourselves and the government.
Let's just take a quick look at the share price. This is the London-listed stock, if we can bring this up. At 235 pence is where you are. What catalysts or milestones, if you like, are going to be seen from the company to maybe drive that in a more positive direction?
I hate commenting on the share price because I suppose it's our job to do our job as well as we possibly can, and then the market deals with the share price. But as we move towards 1.2 million tonnes, well, obviously that's a significant change, and as we sell into two markets, the titanium feedstock market and the zircon market, because we have a co-product which represents 30% of our supply. Zircon is in short supply and high demand at the moment. Prices are moving forward. So the zircon price is good. And the price for our titanium feedstock minerals is at present, neither moving forward or back. It has moved positively over the last 18 months and sort of effectively is pausing at the moment. But we foresee that market will move further into deficit in coming months, maybe early 2019. And as our market improves, and the revenue per tonne improves, again, I think it's a basis for re-rating of the stock.
Look, Michael, we've got to leave it there, but thanks indeed for coming. It's a pleasure, and congratulations on the Capital Markets Day.
Well, thank you, Jeremy, and thank you very much for giving me the opportunity to have a chat with you.
Good.
Great.
Okay. Nice to speak to you, Michael. Thanks indeed for joining us. Michael Carvill is Managing Director of Kenmare Resources.